Hello, this is David Lee. Welcome to the We Buy Houses Learning School monthly conference call, and I've given this month's call the title of Why Vendor Finance is Ready to Return. Vendor finance quite often returns when there's times when the banking system is not functioning. It's more difficult to get loans. You cannot rely on it. It happened with the global financial crisis of 2008 when we introduced lease options, and everybody thought lease options, and more lease options. Well, it's not just lease options. So I have the impression that people think the world out there today, in the West, that is just business as usual. Oh, the Bank of England is dropping interest rates by 0.25% or 0.5%, whatever, as if this is the big wide world. You've got to make up your own mind. Nobody can tell you anything. But I'm sure you're aware that things are not normal. And that's why I'll show you a little later on how vendor finance does return when things get to this historical moment in time like we have today. So just take a look for yourself. Do a bit of checking up. Bank failures. There's been half a dozen in the last 12 months in the US, Credit Suisse, here in Europe. You're seeing the migrant crisis. What is the economic effect of that going to be? Europe, United States, quite often they're lower skilled people, not readily going to get into the work force. They're just going to be relying on benefits. You've had this authority rule from governments over the last few years, and it's just like we're just like pawns being moved around the chessboard, and somebody else is in control, but not us. You are aware that governments have been printing money and increasing the national debt over the last few years. It's at record levels in the US. It's grown in the last 4 years incredibly. Are you also aware of the BRICS nations? More and more members are joining BRICS, so you've got an alternative to the Western countries' financial money transferring system. What happens if there's less dependence on the US dollar in the West? We've got the CBDCs, the central bank digital currencies. Now, can that potentially have an effect on your financial situation? Because every transaction is going to be checked and verified and recorded. They will know everything about your every movement, and they can switch that off if they don't like you, for whatever reason. We are on the brink of World War III. What's the consequences of that? Fighting. I don't know how we're going to be fighting. It's all going to be nuclear. So you won't have to worry about global warming. We've got the inflation just killing people's the cost of living. You notice it all the time. Aging society, pandemics, printing money. These things are going on all the time, right at this very moment. And to me, I can see similarities, but on a much grander scale, from the mid-2000s to the time of the global financial crisis, when everybody wanted to know about lease options, and more lease options. Let's go and take a look further. People don't know what vendor finance is. They think lease options, that's it. Vendor finance is also known as seller finance, terms contracts, or vendor terms. It means that the seller of the property, the vendor, offers easy payment terms. So it's not rent to rent. We've got somebody that's is a buyer or a future buyer, and a seller or an investor or an owner or somebody like that, between two people, buyer and seller, two entities on either side of the transaction. So the buyer, instead of paying full amount up front, can pay the property off over a number of installments over time. Vendor terms contracts are just the same as finance from the finance company, but not in the UK. I worked that around, so it wasn't finance. It was just a payment system, not a credit system, where the purchaser pays installments over time. Very few people have enough cash to buy property because it's such a big purchase. So they get finance from a bank, credit union or finance company. Or with vendor finance, the seller says, I will be the bank, just make your payments to me instead. And that's where everybody in the UK said, oh, you're offering finance, you're a mortgage broker, you need a license, blah, blah, blah. Not the way I did it. And even my solicitors said, no, you're not offering finance. You're just offering instalment payments. From one side to the other, there's no loan. There's just payments going. You go to chapter 4, pages 21 to 22. Okay, and this is where I get back to what I said at the very beginning. Historically, whenever bank loans have been difficult to obtain, just look beyond the horizon. What can be coming down the track? What's possible? Do you have an insurance policy of what you're doing? All your transactions, all backed by bank credit. And what's going to happen if the tsunami comes in? Buyers and sellers have interacted directly bypassing banks. Seller finance, or vendor finance as it's also called, has facilitated property transactions for centuries. And that's why I think this is a key moment to get your attention. Throughout history, there have been a few major turning points that relate directly to these problems. These were events in history that completely changed the game of buying and selling houses. And when you're aware of these historical moments and their implications, you'll really understand why now is the best time ever for you to be getting into property. What I'm reading to you and saying to you is also, it's coming from a legal person's perspective, because that person had worked handling, overseeing thousands of these types of transactions and also been involved personally from the 1960s onwards. And finally, for the intro, I'm going to show you 3 scenarios that you should be able to handle no matter what. We've got 3 houses with a value of $400,000. Houses A, B and C are all worth $400,000, but they have different loan amounts. A has $380,000 owing to the bank. House B has got $400,000 owing to the bank, meaning there's no equity left, and house number C has got $450,000 debt on a $400,000 house. Now, if the house property market moves and moves downwards, these are the scenarios that you will encounter. How will you make money out of each of these types of transactions? Each homeowner has different motivations for selling. They might say they need to sell, but you must dig deeper to understand whether they need the cash bit, income, or relief from mortgage payments. Each scenario has a different why attached to it, and each requires a different solution. Have you got any idea how to solve these people's problems? Because that's what's coming down the line if that tsunami comes in. And if you go and look at all those dynamics that I've given you in the world today, and you follow history, you would like to maybe have that insurance policy up your sleeve as well. So let's continue with the rest of the call.